All right, guys. Well, let's kick it off then. Mandeep, you're gonna be taking us through
Sure.
McKesson, huh?
Yes. So McKesson is it's a global healthcare supply chain management solutions company. So basically, they're the middle guy, the distributors, the wholesalers that work with the big pharma companies, the Eli Lilly's, the Merck's, Pfizer, Pfizer predominantly through COVID, Johnson and Johnson as well, and they supply the pharmacies, the CVS's, the Rite Aids, Walmarts of the world, as well as other biotech companies. They're the largest unit is basically just doing what we just said there. They've also have some more growing but much smaller divisions, including medical surgical solutions, where they provide um, equipment and supplies to surgical doctors' offices, medical companies, and also cloud-based solutions for supply chain management for pharmacies as well. Now the stock has been doing quite well because of COVID. They're one of the largest distributors of the vaccine through working with different governments through COVID, and the recent stock recently got upgraded to A minus. It had strong earnings growth. If you look at our website, it's got 130% plus earnings growth based on, I believe it's like 5%, 4.5% revenue growth. And the reason why there's such a dislocation in those is because McKesson is looking to let go of actually diverging European units. So if you
Mhm.
look on an adjusted basis, which we don't show on our website at the moment, it's more like 28% earnings growth. Strong company has beat expectations in each of the last 20 quarters for earnings since 2018, except for one. It doesn't have,
Wow.
yeah, it's very, very strong. It's lagging the S&P year to date. It's up maybe just past like 11% compared to 15% or so for the S&P 500. And the reason why it makes it onto our high value stocks heat maps is because it has pretty strong, compelling valuation metrics. It typically trades, it typically trades at a bit of a discount to the S&P 500. The S&P 500 is trading around 20 times forward earnings. This stock is currently trading at 15 times. And relative to its peers, it usually trades at a premium. But right now it's trading right in line with those 15 times forward earnings. And in terms of our revenue, it's even bigger. I see an even bigger discount. It's only trading at 12 times EV to revenue, and typically trades at a much higher multiple there as well. So this is a stock that you may want to keep on your radar. And the reason why I think it's even more compelling is because divesting some of those European units is going to help it become a bit more streamlined and be able to focus on more domestic opportunities.
Mhm.
And the company has done quite well to raise a lot of money from COVID and taking in government money and things like that over there. But invest in M&A in some of the smaller units in this company. So they're trying to look at opportunities here. And they've done quite well as well. So so far it's kind of like a pivot, and then the strategy here is what are they doing with that money, and if that's actually coming down to the bottom line. And so far it looks like it has 28% adjusted growth in EPS in the last quarter. Next earnings release is going to be in about a month or so, the first week of August, and it also has a issued a $3.5 billion share buyback. So the
Mm.
company's management is also saying, hey, listen, great opportunities out there within our own company. So we're going to buy back shares.
Yeah, it's a lot. It sounds like a lot's there to underpin price increase, which, I think that underscores, obviously to, somebody that's looking to build their portfolio, or they're really trying to understand what it takes to make money in the markets. I mean, obviously for guys like me, they think it's technical analysis and all of our Ouija boards and whatnot that we put on the chart. But at the end of the day, it's a business and they've got to execute, and not only execute, they've got to execute well, and they've got to execute well compared to not just their near competition, but really the global markets, especially when you're talking about, the stock market. You're competing for investor dollars, and it's like, hey, why should I put my money into something like Merck versus, eBay or Apple or whatever is, leading the headlines? That's a really compelling story. It's a good one.
Yeah, it's funny because it reminds me, just looking at the different items that Mandeep was talking about. It introduces that word diversification again. They're not in one area really, but they've got an overarching. Well, it may be called healthcare, but frankly, some of their paper products are used in multiple industries, and this may be their target audience. But frankly, if they expand out of that, which they are more than capable of, because simply they have to have customers who just want the products. If they order them, then their reach is much greater than perhaps their obvious market. And they are tremendous suppliers. I mean, I have had experience with their supply chain, and they must have an enormous organization for distribution. And it seems that is an essential item of any of these diversified companies. They must be really organized to survive, to succeed, and to grow. It's just they're unable to do that without. And it's interesting that we find all these companies who are like this. They're growing, but they have their own supply chains and they have their own organization for distribution. And they're really trying to keep a control over it, rather than what you might have imagined would be hand it over to somebody who's that specialty it is, and say, just make it so. Okay. It's interesting to see that they actually are keeping it themselves. And that's not the only time we've seen that.
Do you think that what we might be seeing broader or more broadly is that we had this move to more just-in-time manufacturing, just-in-time delivery? Obviously, back in the day, Dell, certainly Walmart, I think was really the pioneer in that. But do you think because of COVID and everybody keeps talking about this quote supply chain thing, which is what I'm getting to. So do you think we're maybe seeing a return to some of the old world, where a company like McKesson would be more vertically integrated, particularly on the supply side? Are you guys seeing that maybe?
Yeah, just in time is a wonderful concept. I mean, I saw that in the motor manufacturing business, because that was
where I first heard of it too.
You absolutely had to have that. If you didn't buy into the Japanese system, you were going to be losing money big time. And many motor manufacturers went out of business as a result of not being able to adapt. However, this risk of global sourcing, and if you don't have multiple sources for a particular product, which car manufacturers do now, I mean, motor manufacturers do not rely on one company to produce a widget. They've got several. They dare not lose that. And when they do, as we saw when COVID broke out, the problems that then come forth then start to make you think, hey, how can we control what we have when we have it, what we can make when we can make it? And it starts to I think, make companies think about having some internal resources, even if they do use external suppliers for some parts that they're using. They have to also look to having a local or internal source for everything that they do, because you cannot be caught short waiting for some ship to come from China or Japan or Australia or wherever else it's going to come from. You've got to be able to make what you make.
Yeah.
Interesting. I'll add onto that as well, that McKesson's trying to use AI now to improve its supply chain. And what they're trying to do is use it to help predict demand, optimizing inventory levels, like Evan was just saying, trying to use just in time, things like that. And they're also using it, I'm not sure how, but to help prevent counterfeit drugs from entering into that supply chain as well.
Yeah, no, that was a big deal years ago. I remember seeing an article about Viagra in particular, how they were getting pills out of customs that were 30% gypsum. So you get a nice dose of wallboard with your blue pill. Well, good. I mean, that's a lot of upside. Do you guys see any maybe downsides or things to watch out for with something like McKesson?
The biggest notable thing for me is that it doesn't really pay much of a dividend. It's a growing large company. Some will consider mid cap, but it's only got a 0.5% dividend yield. Albeit it is growing it. The last year it grew by 10%. So it's that could be a driver for future growth if that dividend continues to grow at those double digit numbers. It'll get on a lot more folks' radar, but it's a little bit light there.